All right, okay. Without further ado, let's just kick things off. Right, so today's webinar series is going to be the live trading session. So let's of course let's go through a disclaimer. Right. So do take note of the risk warning that comes with trading Forex and CFDs, right? All the products on IronFX are traded on margin and carry a high level of risk, and it is possible to lose all your capital. And also do take note of the disclaimer over here. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. All right. Okay, so my name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between Everest Fortune Group and IronFX, where Everest Fortune Group has been a finalist for Best FX and Equity Research for the following years, 2020, 2019, 2020, and 2021. All right, before we dive into the charts on TradingView, we'll just take a quick look at some of the key economic events that are coming up today and tomorrow, because they could potentially be market moving for currencies, commodities such as gold, as well as the indices. All right, so up first, we've got inflation data out of the US this evening, or this afternoon, depending on your time zone. We've got CPI data that will be released today. Then we've got unemployment claims as well. And we also have GDP data in the UK up tomorrow. All right, okay, so here's, so this calendar is from Forex Factory. So I'm on GMT time. So all the timings that you see on this column here are in GMT time. Right, UTC +8, or UTC 0, sorry, UTC 0, GMT time. So as I mentioned, we have CPI data coming up today, headline CPI and core CPI data at 1:30 p.m. GMT. Then we've got unemployment claims as well at the same time. And then tomorrow we've got inflation data out of China as well, 1:30 a.m. GMT time. This could be potentially be market moving for crude oil prices. Then we've got UK GDP up at 7 a.m., which naturally is going to dictate the direction for the pound. And we've got PPI data coming up for the US as well. So PPI is Producer Price Index. This measures the level of inflation in the wholesale sector for the US. All right, so let's just take a look at inflation data in the US CPI data. So the chart on the left, right, the chart on the left shows headline CPI, while the chart on the right shows the core CPI. Right, so what it means, 12 months percentage change, that means the year-over-year change or the annualized change. Right, so when we look at headline CPI, we can clearly see that it peaked at 9.1% in June of 2022, and it has retreated quite sharply over the last 18 months or so. Right, November's reading came in at 3.1%, and although inflation is rising, but is rising at a much slower pace. So that's what the annualized reading or the year-over-year change tells us. So when we see the CPI rising very sharply as we did in 2021, that means it's telling us that inflation is rising at a rapid rate. Whereas when you see inflation now starting to fall, it is still rising, but it is rising at a much slower rate. Similarly, for the core CPI, we saw it rise rapidly in 2021, in 2022, of course, and then it peaked at 6.7% in September, after which it pulled back quite sharply as well, with November's reading coming in at 4% year-over-year. So in all, inflation has been retreating pretty steadily over the last 18 months or so, which gives the Federal Reserve an opportunity to maintain interest rates, right? Instead of raising interest rates aggressively throughout 2021 and 2022, they are now in a position to keep interest rates on hold, with the Fed funds rates being kept at 5.25 to 5.5%. Right? So although inflation is still well above their target of 2%, right, it is at least moving in the right direction. Right, inflation is falling in the right direction with regards to CPI data, and as long as it continues to retreat lower, that means the Fed is definitely not going to raise interest rates, but they are very likely to keep interest rates on hold, right? I think they would like to see inflation come pretty close to the 2% target before they start talking about interest rate cuts. All right, so just a quick note of how we can interpret the CPI data today. So in general, if you look at the annualized CPI reading here on this Forex factory calendar, the estimate for December is 3.2%. November's reading was 3.1%, as you can see here, right? Just let me change this to my pen. Right, November's reading is 3.1%, which is highlighted here. Oops. This is November's reading. And we have December's forecast here. So what this is telling us is they are expecting inflation to increase slightly from 3.1% in November to 3.2% in December, right? So however, if inflation continues to fall, meaning it comes in lower than the forecast and perhaps even lower than 3.1%, which was November's reading, right? That means we could see the US dollar continue to sell off, right? We may see the US dollar, the sell-off in the US dollar accelerate, right? However, if inflation comes in hotter than expected, meaning it comes in higher than the estimates for both headline CPI and the core CPI, that means we could see strong demand for the US dollar picking up later today. So do take note, 1:30 p.m. GMT today is going to be a very volatile event for currency markets and for gold prices as well. So if we see hot CPI data, then it's quite likely going to trigger a strong demand for the US dollar, which would mean currency pairs such as the euro, the pound, Aussie, Kiwi will fall, gold prices will fall too. Conversely, if we see softer than expected inflation, then we're likely to see the US dollar sell off. So that means gold prices should rise and currency pairs such as the Aussie, Kiwi, pound, and the euro all should be rising as well. All right, up at the same time, 1:30 p.m. we also have unemployment claims coming up. So just quickly, what are unemployment claims? Basically, this is a data point that measures the number of Americans that are applying for unemployment benefits. Now, this data is printed every week, so it is released on a weekly basis. So when you have a figure that comes in lower than the estimates, like do take note, the blue bars are the actual results, while the orange bars are the estimates. When you get a series of data where the actual data is coming in lower than the estimates, that means less people are filing for claims, then this generally signals a robust labor market in the US, which also typically should provide some lift for the US dollar. Conversely, like in this period here, where we saw the actual data coming in higher than the forecast, that means there are more Americans filing for claims. This typically signals that the US labor market is potentially cracking, and that it may have a negative impact on the value of the US dollar. All right, so just on the next slide, so how to interpret the data. So we can see today's forecast is at 209,000. Last week's result came in at 202,000 claims. So if today's number, the number of claims today come in higher than the forecast of 209,000, this is typically going to be bearish for the US dollar, and we are likely to see currency pairs such as the euro, pound, Aussie, Kiwi, and of course commodities such as gold rising. Conversely, if claims come in lower than 209,000, that means there are less people filing for unemployment benefits. That means we have a robust labor market. This is typically going to be bullish for the US dollar, and we are likely to see the above currencies and gold prices fall. All right, this is how we can quickly interpret the data for this later on today. Right. Tomorrow, we also have UK GDP data being released. This is the monthly GDP indicator. So as you can see, for pretty much over the last 12 months, GDP has been mixed in the UK, right? We can see a few months of growth on a monthly basis, accompanied by months of declines as well. So overall, economic activity has been mixed in the UK, and this November's forecast is showing to a growth of 0.2%. If we do see the actual result coming stronger than the estimate, we may see the pound being lifted. All right. Okay. With that, let's jump on over to TradingView and dive straight into the charts and see what's going on. All right. Okay. So I'm on the 4-hour time frame for the dollar index. And as you can see, right, okay, as you can see, oh, hang on. All right, okay, as you can see, it's been trading in a bearish channel since 1st November of last year, right? But of course, there's been a couple of times, most notably on 5th January, where we had NFP data being released, where price peaked above the upper trend line of the bearish channel, and similarly earlier this week as well, price has made an attempt to break out of this upper trend line, but has failed to do so thus far. It's currently trying to break out of this upper trend line of the bearish channel once more, right? Once more, it is attempting to break out of this channel. Okay, so with that, we can see, let's try and identify the key support levels. So basically, if we get inflation data that is going to be hotter than expected today, that means we are likely to see the dollar index rising towards the first resistance at 102.80. Right, so do take note, if you are long on the dollar index and we do get a stronger than expected inflation data, it is quite likely to push the dollar index up to the first resistance at 102.80 and perhaps slightly beyond. So do take note, this area here or this zone is an area that you can identify as a potential take profit zone for your long dollar positions. Right. Conversely, we have a strong support at 102.07, right? We see price finding support here on the 3rd of Jan, 5th of Jan, 8th Jan, 9th Jan, as well as earlier today as well. You can see how this level has been a very decent support for prices for the dollar index, and it's attempting to break out of this upward trend line as we speak. Right. So conversely, if we see softer than expected data, then we may see the dollar index continuous downturn, right? And that means it's quite likely to break below this first support and potentially drop all the way down to the second support here at 101.42. All right. So we can also see we've also run a Fibonacci retracement, right? We started, oh, hang on. We started this retracement from this swing low here, 0.1, 28 December, ending at 0.2, which is 5th Jan. We are using the 38 and 61% Fibonacci retracements to help us identify or to help us add significance to the support level that were identified. So this is a strong support level at 102.07. This is a pullback support. That's why we've identified it as the first support. That also aligns very well with the 38.2% Fibonacci retracement. Similarly, the support level at 101.42 is another pullback support level where price has found support at the end of December, and it's also a level that aligns quite close to where the 61.8% Fibonacci retracement lies. Right, to the upside, we can see that this price level here at 102.80 is a pretty strong pullback resistance level that aligns very well, or not aligns quite close to the 61.8% Fibonacci retracement. Now, this retracement was found by starting from up here, 0.1 on 11 December, and ending with a swing low here on 28th. So we can see that the 61.8% Fibonacci Fib aligns quite well with the first resistance at 102.80. Similarly, the Fibonacci retracement at 78.6 is another level that aligns very well with the swing low here, right? We can see price making a pretty decent swing low bounce here on 8th of December, and then another bounce on 12th of December before finally breaking through. So previously, this was pullback. This level at 103.50 was functioning as a pullback support level, but of course, now that price has broken underneath it, is quite likely going to function as a pullback resistance level, which also aligns with the 78.6% Fibonacci retracement. All right, so do take note. So we've got unemployment claims and inflation data coming up. So if we see hotter than expected inflation data, is quite likely we are going to see dollar index break above 102.50 and potentially rise up towards the first resistance. Conversely, if we see softer than expected inflation data, it's quite likely this current move up is going to reverse, and we're going to see it potentially break under the first support. This could probably give us a potential bearish breakout where price may continue to fall all the way to at least where the 61.8% Fibonacci retracement lies. All right, okay. Then, all right. And all right, do not hesitate to drop your request for any analysis that you would like to be viewed, right? I will go through the majors, I'll go through oil, well, not all the majors, I'll go through some of the majors, I'll go through oil, gold, and cover one or two of the indices as well. But of course, if you have any analysis that you'd like to see for the crosses or any other pairs that I'm not currently doing, do not hesitate to drop your request in the chat box early so that we have time to go through it properly, right? Do not leave it right till the end where, we might be a case where we have to rush through the analysis, all right? All right, of course now, with dollar index rising, that means currency pairs such as the euro and pound should be falling, right? And which is what we are seeing now. So this is the chart for the euro. I'm on once again, I'm on the 4-hour time frame, right? So this level here at 1.0967, we had identified it as an intermediate resistance, right? Because we saw price fail to break above this level on 4th of Jan, briefly breaking above it on 5th of Jan, of course, which was NFP day, and once again briefly going above on the 8th as well as today. But you can see that this is not a very strong resistance level. That is why I've highlighted it as an intermediate level rather than an absolute outright first resistance. And of course, with dollar index rising, the euro is falling down. So similarly, if we get hotter than expected inflation data, that's going to be strong, bullish for the dollar. That means the euro could quite likely fall all the way down to the first support at 1.0893. Conversely, if the data is softer than expected, we may see the euro push up towards the first resistance. Dow, all right, sure. Right. I'll get to Dow as well. No worries. All right. I'll get to Dow as well. Great. Great to see the requests coming in. Okay. All right. So first support at 1.0893 is a decent, is a pretty significant support level. As you can see, price making a very significant, oops, hang on. That's my brush. Okay. Price making a significant swing bounce here on 17th of December before bouncing higher. Similarly, it bounced off, made another swing here on 3rd of Jan as well as 5th of Jan. So you can see 3 instances where price has bounced off this level quite strongly, which tells us that this first support is pretty significant, as well as having the 61.8% Fibonacci retracement adding as a supporting factor. Similarly to the downside, we see price running into resistance here back in early December, right? On 7th December, then again on 12th of December. So previously this level was functioning as a pullback resistance, which is now going to function as a potential pullback support. And we also have the 78.6% Fibonacci retracement, adding to the significance of this level. Right, to the upside, we see a very strong overlap level here, right? Once again, we see a very strong swing high here that occurred at the end of November. Then another strong swing high that occurred on the 14th of December, right? These are 2 significant swing highs, which is so this level at 1.100, right, was pretty much acting as a major swing high resistance. But when price finally broke above it, it found support here to create this overlap level. So this is a overlap resistance level now at 1.1006. which is also a level that aligns very well with the 50% Fibonacci retracement. So this retracement was found by starting from 0.1 here, 28th of December, going down to 0.2, which is 5th of Jan. All right, sure, we'll cover, Bitcoin as well. Yeah, of course, with the SEC approved, giving the green light for the ETFs, Bitcoin ETFs. Let's cover that as well after the Dow, for sure. All right, let's do that as well. Great. Okay, similarly to the upside, second resistance at 1.1139 is a multi-swing high resistance, right? We can see price bouncing off this level or reacting off this level on 27th of July. And of course, as recently as 28 December as well, right? So this is the second resistance here, and we also have the Fibonacci projection at 61.8% to add to the significance of this level. How did we find this projection level? Well, we started from this 0.1 here at this swing low on 8th of December, going up to 0.2, 28 December, and ending with this low here on 5th Jan, 0.3. And we are able to see that 61.8% lines up very well with this multi-swing high resistance. All right. Okay, then let's go to, all right, let's just do Dow and Bitcoin, and then after that I'll go back to the other currencies. All right, let's start. So for Dow, I'll be using the DJ30. Right, DJ30 will be the instrument that I'm going to be using to analyze the Dow. So let's just go on to the daily time frame first. So pretty much Dow has made a new all-time high back in, was it start of the year, right? 2nd Jan 2024. Dow made an all-time high before pulling back. So the first week of 2024, we saw equity markets in the US pull back. And then this week we found them finding support, and then before bouncing higher. So you can see Dow made an all-time high last week, Tuesday, pulling back in the first week of 2021. And then after that, now it's rising up as we speak, attempting to break above this all-time high again. Okay, so do take note of where Dow is trading. Most equities are right. Dow and the Nasdaq have both made new all-time highs and are attempting to break above these levels again. And S&P 500 as well, which is the US 500, trying to break or trying to reach the all-time high again. All right, so let's now go back to the 4-hour time frame and try and identify the key support and resistance levels. Right, as I mentioned here, you can see on 2nd Jan price coming as high as what is this? 37,866 before retreating, right? So this is the all-time high for the Dow, which is a major resistance area. So you can see this is also a pretty significant swing, right? This is a pretty significant swing. So that is why we've highlighted this level at 37,814 as the first major resistance. We also have a Fibonacci projection at 78.6 to add to the significance of this resistance zone. How did we find this resistance, this projection? We started from this swing low here at 0.1, 20th December, going up to 0.2 on 2nd of Jan and ending at 0.3, which is 8th of Jan. So we have used this, once we pull up the retracements, right, or the projections, right? I'm going to pull up all the projections here. So for example, you can see 61 is here, 78.6 is here, and 100% is a little bit higher, right? So you can see how we can find projections, and then because of that, we are just going to go back and keep 78.6, right? Okay. Oh yeah, sorry. And also, we're also using the 100% projection to find the new to find the second resistance. Apologies, this should be second resistance, because like I said, this is the all-time high for the Dow. There's no other resistance levels that we can try and reference. So to find the next resistance level, should this first zone be broken, yeah, we're going to use a combination of the 100% Fibonacci projection and the 137% Fibonacci extension. So this extension is found by using the retracement tool. The retracement tool started from here, 0.1, 2nd of Jan, going down to 0.2, which is the 8th of Jan. And we are using the 137% Fibonacci extension to help us identify the second resistance. All right. So this is what we have. So once again, we do see the Dow futures running into resistance at around 37,800. It's pulling back as we speak. Okay, now how could inflation data impact the direction of equities? Right, so if we see inflation coming in softer than expected, then this means that this is quite likely to cause the value of the US dollar and also quite likely to cause treasury bond yields to fall. So when you have an environment where the value of the US dollar is falling and treasury bond yields falling, this generally creates a supportive environment for equity markets. So if we get softer than expected inflation, this could provide a boost to equity markets, and we may see the Dow Jones make an attempt to break above the first resistance. Conversely, if we get hotter than expected inflation data, that means we're going to see the value of the dollar rise. We're going to see US Treasury bond yields rise as well. This creates a negative environment for equity markets, creating headwinds. So we may see the Dow Jones pull back further. All right, so this is how we can simply try and interpret how inflation data later today could impact equity markets as well. Do take a note of how the value of the dollar moves and how the US Treasury bond yield, such as the US 10-year yield, reacts to the inflation data as well. All right, so do take the first support is at 37,433, right? We can see price making a pretty decent pullback support here earlier this week before moving higher. Similarly, second support at 37,247 is also another pretty significant swing, right? We can see as price came back, fell down during the first week, and it found support at the first week of January, and at the start of this second week of January, we saw it find support here before moving higher. So you can see this is a pretty significant swing as well, and that's why we've identified it as a second support, which also aligns very well with the 78.6% Fibonacci retracement, right? This retracement, once again, was found by starting from 0.1 to 20th December and ending at 0.2, which is 2nd Jan. Right, do take note of that. So similarly, of course, we are also likely to see the US 500 pull back from its resistance as well, right? And we're also likely to see the NASDAQ 100 or the US 100 pull back as well. All right, okay, with that, let's move on to Bitcoin, right? Let's go on to Bitcoin. Right, so you can see here 9th of Jan, just a couple of days ago, the SEC claimed that their Twitter account or their X account was compromised, and there was an news, a post being sent out saying that the Bitcoin ETF had been approved, right? And that's what caused this large spike here. But however, they came out shortly after to say that their account was compromised, and there was no official news on the ETF being approved. Thus, you see this very volatile candle on the 9th of Jan, right? But as one of our viewers has rightly pointed out, this was finally officially announced overnight, right? This was finally released or announced overnight that the SEC had indeed given the green light for the Bitcoin ETFs to be released. Once again, we saw a very volatile candle, and it does look like Bitcoin is racing up towards the first resistance. All right, okay, how did we, right? We can clearly see this top of this wick here is the first resistance, and even here overnight, 10th of Jan, price did attempt to make to break above this level, but it failed to do so. So we do see Bitcoin being supported, at least in this candle here, with current candle trying to push above 47,000. So if you're long Bitcoin and you do see it break above 47,000, where you should consider booking profits or partial profits at the very least would be around the first resistance, right? At around the value of 47,900, right? Especially if you see a price break above 47,000 and trying to rise up towards 48,000, where you can potentially target your profit or take profit zone or level would be around this first resistance, right? You can probably try and aim to close out at least half of the position first, perhaps not the full position, but depending on your strategy or your personal style of trading, right? Okay, so on the support side, before I cover second resistance, I'll just cover the support side. When we see this support at 45,520, that's a pretty decent support level. Why is that? Because we can see price making a pretty significant swing here right at the start of January, and then of course once it broke over, you can see basically roughly is not at least the body of the 4-hour candle has managed to stay above this level. That's why I've identified it as the first support. Of course, we do see the wicks dropping below it, but otherwise the first support at 45,500 is a pretty decent support level for Bitcoin. And similarly, the second support here is another overlap level, right? We can see for the first week of 2024, Bitcoin failed to break above 44,300, and when it finally did, it went through this volatile period over the last 2-3 days, but it found support at 44. All right, okay. Let's just continue. Hopefully everyone else is able to tune back in. Apologies for that. Okay. All right, Babangida, okay, and anyone else who's been able to go to tune in. Well, okay, we'll just end up with Bitcoin, and then after, do let me know if there's anything else you'd like me to cover. Otherwise, I'll just maybe cover the commodities. We'll look at gold and we'll look at oil as well. All right, okay, just to summarize or just to wrap up Bitcoin. Like I said, this level here at 44,300 is a pretty significant overlap level, and we also have the 50% Fibonacci retracement, adding to the significance of this support zone, right? This is a pretty significant support zone here. We found this retracement by starting from 0.1, 3rd of Jan, ending with a swing high here on 9th of Jan, 0.2. And we can see that 50% Fibonacci retracement aligns quite well with the, let's see this 50, sorry, it was covered by the candle, right? All right, Francis, good to see you as well. Apologies, I'm not sure why Zoom and well, closed out by itself. It was very strange for that to happen, but good to see you join us again. All right, thanks for tuning back in. Hopefully it wasn't too much of an issue to sign back into to join the meeting again. All right, okay, so as I was saying, second support here is a significant overlap support at 44,300, and we see this we have the additional supporting factor of the 50% fib as well, right? So once again, Bitcoin, should it break above 47,000, where we can consider taking or identifying a take profit zone would be around the first resistance at about 47,800 to 47,900, because you can clearly see that price here has run into resistance twice, right? And it could run into resistance again. So what would be a prudent approach would be to at least book some profits around this first resistance area should you be long Bitcoin. All right. Okay, with that, let's go on to gold, and then we'll look at oil as well. All right, okay. So, okay, let's just zoom out a little bit so we can get a good sense of how oil is trading. Oh, sorry, gold is trading, pardon me. All right, okay. So as you can see, since the beginning of the year, gold has been pretty much ranging between 2,050 per ounce and about 2,020 per ounce, right? Roughly, you can see that this area here, right? Gold has been range bound pretty much, right? For most parts of this year so far. There's no real catalyst for it yet to break above the resistance and support, right? So let's just say, so this could be a very good range bound play for gold as well, right? As we saw, although it didn't come all the way down to the first support here on yesterday on 10th of Jan, but as it reversed up, this would have been a potentially a good area to take a long position and try and play the range and maybe target between 2040 as a take profit zone, right? So as you can see, gold is pretty much has a neutral bias, right? There's no really strong bullish trend like we saw in mid-December, from 13 December all the way till 28 December, right? For a period of 2 weeks, we saw a very strong bullish trend for gold. Similarly, at the end of December and into the first week of Jan, we saw a very strong bearish trend. But now it's quite clear that the bias for gold is neutral now, right? There's no real catalyst for it to push it in either direction. Okay, so first support is identified here. Why is this significant? Well, we can see a price running through resistance here back at the end of November, and after breaking higher, it found strong support here on 5th December. Then once again, it found support here on the 17th, and of course, here again, finding strong support on the 8th of Jan. So we can see multiple instances where price has reacted on this level as a resistance and support. Right, so that is why we are identifying 2016 as the first major support for gold, and it's also a level that aligns very well with the 61.8% Fibonacci retracement, right? We started this fib retracement from here, 13th of December, going up to this high on 28. You can see 68 aligns very well with the first support. Conversely, similarly, we also see another very strong swing low support here on 12th of December, right? Price making this very significant swing bounce here, bouncing off 1,976. So hence, we are using this swing low support here to identify the second major support for gold. All right, to the upside, right? This is another strong pullback resistance level, right? We can see price running the resistance here, 14th of December, 19th of December. Then again, from 4th Jan all the way till earlier this week, we see price fail to convincingly break above it. Of course, we do see the wicks climbing above it, but we fail to see price convincingly break above it. So hence, we can identify this level at 2047 as a major pullback resistance, which also aligns very well with, not very well, but aligns quite close to the 50% Fibonacci retracement. All right. But this is what we've got as well. And to the upside, of course, is this multi-swing high, right? We can see price making this multi-swing high here, 4th of December, and once again here on the 28th, two swing highs, which is why we're calling this a multi-swing high resistance. And we also have the Fibonacci projection, right? We started this projection from 0.1 here, 30 December, going up to 0.2, 28th, and ending at 0.3, 8th of Jan, to give us the 61.8% projection, which aligns very well with the multi-swing high here. All right, so this is what we have for gold. Do take note, it is in a range-bound trading, sideways trading. The bias is neutral. There's nothing really going for it, right? There's no major moves to the upside or downside for now. All right, let's cover oil, and then we can cover some of the commodity pairs such as Aussie and Kiwi as well, or any other requests that you may have. Yeah, if you have any requests for the crosses or any of the indices, I'll be more than happy to go through the analysis with you. All right, okay. Coming back to WTI oil, right? Okay, so this tracks WTI futures. So similarly, we can see that since the beginning of the year, oil has no clear direction. It is sort of ranging between $70 per barrel and $74 per barrel, right? If we zoom out a little bit, we can see oil was in a pretty strong downturn or downtrend since end of September, right? We can see a very strong downtrend here, and then price seems to be consolidating from mid-December onwards, or we did see a strong, pretty decent retracement to the upside, but pretty much as we start off the new year, we are seeing a lot of sideways trading for gold. So it's not for WTI oil, it's not really heading anywhere, right? So so once again, you can potentially play the range here, right? So with price coming up towards the first resistance, if you have been long on WTI oil, this first resistance at about $73 per barrel would be a zone where you should consider booking some profits at the very least, and then ride your stop loss higher to at least prevent your position from being from hitting your stop, right? Similarly, when should price react of this first resistance and start to fall, you could potentially open a short position and target this intermediate support or this intermediate pullback support at $70.60 as a take profit zone as well for oil. Okay, so for oil, what we've done is we've used the Fibonacci projection starting from 0.1, 5th of Jan, going to 0.2, 8th of Jan, and ending at 0.3, 10th of Jan. We're using the 100% Fibonacci projection here to add significance to the first support, which is this swing low that we see here, right? This is a pretty significant swing low bounce that occurred on 3rd of Jan, right? And we also have the 78.6% Fibonacci retracement, right? We can see this retracement here, 0.1 to 0.2, adding to the significance of this first major support zone, right? So we have two Fib levels. One is a 78.6% retracement, and the other is a 100% projection, right? So we have a very strong support zone for crude prices, particularly WTI prices at around $69.30 to $70 per barrel. And to the downside, should the first support be broken, we once again have a very significant swing low bounce here that occurred on 13th of December, right? 68.20 is a very strong support level for WTI oil. Right, to the upside, as I mentioned, there's not much going on for WTI oil. We see prices running the resistance here yesterday at about 73.20, So that is where we've identified the first resistance, and the second resistance is identified at $74 per barrel, right? We can see price failed to break above $74 on 4th of Jan last week, as well as 5th of Jan, right? So it's pretty much range-bound trading for oil. Not much going on for it, but you can potentially play the range, right? Identify the major support and resistance levels, try and look for the turning points of this respective first resistance and the pullback support, and try and play the range if possible. But do take note to keep your stop losses relatively tight for this, because you could have a potential breakout to the upside either way, right? Any escalation of geopolitical risk in the Middle East could cause oil prices to spike, right? So do take note of that. Although oil has not been doing much, crude prices have not been doing much for the first couple of weeks of 2024, but do take note that any further escalation in the Middle East could potentially be the catalyst that's going to cause WTI oil to break through the first and second resistance levels, right? So do take note, if you are going to play the range, short the resistance, long the support, it would be prudent to run your stop losses relatively tight, right? And also, of course, to trail your stop losses as well once the position goes in your favor. All right, okay. Guys, Francis, Babagida, is there any other currency pair indices that you'd like me to cover? Do drop your request in the chat box. Otherwise, let's just take a look at dollar yen as well. Okay, let's take a look at one of the other major, dollar yen. Right, okay, so these were the levels that were identified yesterday, right? So we can clearly see this was a swing high from last week. That's why we identified it as the first resistance, which now has clearly been broken, right? But you can see that it has failed to progress beyond 146, right? Dollar yen has failed to progress beyond 146. So as of now, we may see, let's see, basically I think markets and traders are basically waiting for the inflation data to drop. Do take note, we've got US CPI data being released today at 1:30 p.m. GMT time. Remember, hotter than expected CPI data could likely cause the dollar to rise. So that means dollar yen could push up beyond 146. Conversely, if inflation data is soft, we may see the dollar sell off, and that would cause dollar yen to at least drop towards 145. So do take note on that. Okay, so second resistance is this overlap level here at 146.46, right? We can see price finding pretty decent support here on 4th of December. We can argue as well 5th December before finally breaking lower. But as it approached this level again, it ran into strong resistance on 11th of December before fading, right? So you can see that this overlap level is clearly significant, and that's why we've identified it as the second resistance. Not only that, we also have the Fibonacci extension at 127% to add additional significance to this level. This extension level was found by running this retracement from 0.1, 19th of December, ending at 0.2, 20th of December. So we can see, I'll highlight it as a zone, so it's much more clearer, right? So we have a pretty strong resistance zone at the second, for the second resistance. Right, all right, Babangida, yes, for sure. I'll cover Frank Yen as well, right? I'll cover Frank Yen after this for sure. All right, to the downside, right, we can see price making a pretty significant swing bounce here on Tuesday, right? And also another small pullback support level here. So hence I've identified 143.30 as the intermediate support, right? I've not labeled it as the outright major support, as just an intermediate support. It also aligns pretty well with the 50% fib. First support is identified at this pullback support level here at 142.50, which is also a level that aligns very well with the 61.8% fib. And of course, the second major support for dollar yen is the significant swing low that occurred at the end of last year, right at the end of last year, before prices bounced very strongly. Right, so these are the key levels that we have for dollar yen. All right, with that, let's move on to Swiss franc, Japanese yen. Let's do that now. Swiss franc, Japanese yen, where are you? Yeah, here we go. CHF JPY, Swiss franc, Japanese yen. All right, let's start the analysis on the daily time frame, so we know exactly how this pair is trading. Wow, it looks like this is trading at all-time highs pretty much. Okay, I'm on the monthly chart and we can clearly see price has broken above 170, which is clearly an all-time high pretty much. Okay, the data only goes back to 2005, but as of now, I would say that this is the all-time high for franc yen. Seems like the sky's the limit for this currency pair. All right, let's move on to daily time frame and see where we can identify the key support and resistance levels. So clearly, this all-time high here is obviously or naturally is going to be our first resistance. So let's just label it as such. How would we identify the second resistance? We don't see anything else, right? At least there's no other point in history where we can try and identify or try and reference. What we can potentially do is use a Fibonacci retracement tool and try and use one of the extension levels. So we're going to run this retracement from here, 16th of November, going down to this swing low here on 14th of December. We can pull up the 127 and 161% extension levels, right? So we can see, right, first resistance is clearly here. Second resistance, I would identify it as at the 127% Fibonacci extension. And should that also get taken out, then of course the next resistance would potentially be coming in at the 161% extension. All right. This is what we have to the upside in terms of overhead resistances for franc yen. Now, what about to the downside? Okay, we do see price finding pretty decent support here on Tuesday and Wednesday. Right, this could potentially be support level. Okay, if I go across here, I do see a pretty decent overlap, right? Why is this an overlap level, right? We can see price running into resistance here on towards the end of December, and then when it broke above it, it found support, bouncing off 168.80. So this creates an overlap level, which looks pretty significant. So I'll use that 168.80 to identify the first major support. Now, what about the second one? Okay, we also see price pulling back now, so we can also run a Fibonacci retracement from point 1 here, 14th of December, going up to the absolute high, which is the absolute high here. Absolute high is here, 11th of Jan today. Let's pull up all the fibs. Right, we can see that the first support, let me just zoom in a little bit. Apologies, I zoomed in a little bit earlier, right from the start. Right, so you can see that the 23% Fibonacci aligns quite well or quite close to where the first support level is. We also see another decent pullback support level here at 166.90, which aligns with the 50%, and another decent pullback support at 165 and 61. But we can I would probably use this level here at 167. We can see another overlap, right? You can see price running into resistance here on 19th and 20th December before finally breaking out, and then finding support on 2nd Jan and 3rd Jan before moving higher. So this is also clearly another significant overlap level at 167.07, and I'll use that level to identify it as my second support, which also aligns well with the 50% fib. So we're going to use the 23 and 50% fib and get rid of all the others. Right, so you can see how the Fibonacci levels also add significance to this to the importance of this first and second support. All right, okay. So these are the major resistance levels on the daily time frame. Okay, now let's zoom in onto the 4-hour time frame, right, and see if there's any other actionable levels that we can try and identify. Right, okay. Right, of course, when you zoom in, it's good to start with a top-down approach. So generally, I start with a weekly time frame or daily time frame, and then I like to drill down into the lower time frame, such as the 4 and 1 hour, to fine-tune my support and resistance levels, right? Which is something that I recommend for anyone to do, right? At least get a good overview of how that particular instrument is trading. So at least start with a daily time frame to get a top view of how it's been reacting. Can you identify any clear bullish trends, bearish trends, or is it just sideways? So you can clearly see here, price has been trading in a pretty strong bullish trend. right? We see a nice strong ascending trend line as well, right? So since mid-December, franc yen has been a pretty strong bullish trend, and should prices pull back, as we see now, it may find support at this ascending trend line. So do take note, we've seen price bounce off this ascending trend line on 2nd of Jan, and as well as this week, 9th of Jan. Should it continue to fall today and tomorrow, it may find support at this ascending trend line for it to reverse and resume the uptrend. So do take note of this trend line. This is pretty key. If, however, we do see price breaking underneath this ascending trend line, then of course that bullish trend is probably going to signal that the bullish trend is over, and we may see prices falling down to the first support. Right. Okay. Since I'm on the 4-hour time frame, I'm just going to slightly fine tune my levels here. So as you can see, right, clearly this is a resistance here. Even over here, this is resistance, and of course on 9th Jan, this is support. Right. So you can see the intersection of the ascending trend line and the first support here created a very this pullback created a very strong support zone for price here. Now, could this ascending trend line once again provide support? So should we see price stall around the ascending trend line and reverse to go higher, that could give us an opportunity to get in on the long franc yen trade once more. Right. Similarly, for the second support, that's fine. I'm not going to fine tune it. And if you actually go all the way back here, you can see that this overlap probably extends all the way till here as well, all the way to this swing low on the 21st of Jan. But, right, that's fine. I think just leave it as it is. Resistance, I think it's fine. Okay, so do take note, based on the 4-hour time frame and also on the daily time frame, franc yen has been in a strong uptrend, and we may see prices being supported at this ascending trend line. All right, I'm coming quite close towards the end of today's webinar. I do have time for one more request. Should there be any, please let me know right now in the chat box. I'll be more than happy to go through it with you. If not, then I would just probably cover, let me see. Let's just cover, well, let's do an index. Okay, is there any questions, any other requests? Any further requests? If not, let's just wrap up with the NASDAQ 100, right? Let's see where this is trading. So, right, we can see NASDAQ making its all-time high, new all-time high on 28th of December, end of last year. So clearly that's going to be our first major resistance, right? Price is trying to attempt to reach this resistance all-time high again in 2024, but so far it's failed to do so. First major support I see would probably be here, this pullback support level here at 16,550. Second major support would be over here at this swing low here. We can see price making a significant swing low on the 4th or 5th of Jan at 16,200. So I'll identify that as my second support. Now, how would we identify the first support as second resistance? We can run a Fibonacci retracement starting from this swing high, 28th of December, going down to the swing low, 5th Jan. Let's pull up all the extension levels. That's 127,161. We can see that the 127% extension lies at about 17,200. So I'll use that as my second resistance. And should price break above these two levels, then of course, the next area or level where price could run into resistance for the NASDAQ would be at around 17,470. All right. Is there a projection? We could probably try. Let me see. There's a projection I can use. Do the projections line up? All right. We can also see the Fibonacci projections at 78.6 and 100% align very well with the Fibonacci extensions as well. So this gives us more confidence that 17,200 and 17,470 are potentially going to be major resistance levels for NASDAQ should price break above this first resistance at 16,000, pretty much at 17,000, right? I do take note, this is a key support for a key resistance for the NASDAQ 100, or in this case, the instrument that I'm using is US 100. All right, okay. With that, I'm just going to launch a poll. Would truly appreciate it if you guys can provide your feedback, right? Thanks for tuning in once again, right? And do take note, we've got US inflation data, CPI data coming up at 1:30 p.m. GMT time, along with unemployment claims as well, which could inject high volatility into financial markets this evening. Right now, this is going to potentially inject a lot of volatility, not only for currency markets, but for gold prices and US equities as well. All right. With that, thanks everyone for tuning in. Do look out for all upcoming webinars by IronFX. I wish all of you a great trading week, and I'll catch you guys at the next webinar. All right, take care and have a great trading week. Thanks everyone.